and Head of Research at Emkay Investment Managers. Kashyap, morning. Thanks so much. Apologies, got a little delayed over there because, you know, we've woken up to this absolutely new sort of set of announcements from the US president. He wants to tariff generic, pharma manufacturers. So we were just having that discussion earlier. But okay, so let's get, straight to the action then and earnings. What have you made of the Q1 season so far, Kashyap?
So I think if you look at broadly Nifty 100 as an index, about 40% of the companies have declared numbers until today. And I think what stands out in terms of earnings momentum is one, financials. And when I say financials, these are largely non-banking financial companies, NBFCs. What we have seen is auto OEM doing exceedingly well. Of course, ancillaries, barring one or two, they are yet to declare the numbers. But so far as any beneficiaries of the GST cut goes or the lower interest rates are concerned, auto OEM has done exceedingly well. What we have also seen is that within IT, not the tier one or the top four, but some few companies behind them, and as well as probably tier two and mid cap. Some of them have done really well. Broadly, in terms of another very large sector, if you look at banking, we have seen a clear, sort of dichotomy in the numbers. So if you look at, probably some of the large banks, they have declared numbers where they have seen cost of fund rising, which is quite counterintuitive. But I would sort of assume that 4Q was slightly tighter in terms of liquidity. So some of them would have raised money at a bit higher price. But within banking, we have seen some of the mid-cap names as well as one or two in the large-cap names also, which have done exceedingly well. So there we have seen a bit of a dichotomy, but so far, probably, no reason to complain so far as the Q1 numbers are concerned.
But Kashyap, people will argue that with banks, there have been plenty of reasons to complain. I mean, either the market's expectations were running too high, or there is genuine, reason to worry because this margin compression, which was expected, in some cases, that's a disappointment. In some cases, you're not mobilizing deposits, that's the disappointment. Look at Bandhan Bank today, down 10%. What do you make of all the bank casualties in Q1?
So, like I said, I think within large cap itself, we have seen a bit of a dichotomy. So there are banks and I think some bit of it is got to do with the spillover of, cost of borrowing, the cost of deposits, which came over from the fourth quarter of last year. I think as we go forward for next 3 quarters, RBI has been quite benevolent in terms of leaving a lot of liquidity on the table. I think what we see over next about 3 quarters is that this pressure on the funding, probably subsiding a bit. But like I said, within large banks also, there have been a name which has reported significantly better number. If I look at mid-cap private bank, there are banks which have, or rather there is a bank which has declared numbers which have been quite strong. But what I would say is that first quarter has seen some bit of spillover of the tighter liquidity which happened towards the fag end of 4Q. Of course, that money would be lying on the balance sheet in the first quarter also. And consequent, the cost of deposit also will have an impact in the first quarter. I think next about 2 quarters we should see that subsiding. If you look at broadly the commentary which has also come from many of these banks, that's something that they are also alluding towards.
Yeah. So it's become very clear that within banks, things are extremely polarized, Kashyap. The bank you're talking about, yes. ICICI Bank, stellar numbers. But then you've got, HDFC and Axis, and they've been big casualties. Within mid-caps, Federal did so well and the stock was flying away. Today, Bandhan is down 10%. Absolutely. So it's not easy to make money even within banks. So tell us, in your coverage universe, which are the names you like?
Not mentioning really the names, but I think our portfolio in some of the strategies has a mix of large cap, mid cap banks, as well as some of the NBFCs, and which have done reasonably well. I think the only, probably sore thumb which sticks out are some of the, large private sector banks, 1 or 2 of them. But I think, as a portfolio approach, we have been able to manage this really well by having not only, 1 or 2 large names, but also some of the mid-cap banks, as well as, 1 or 2 of the sort of leading NBFCs within that space. But yes, it will be like you said, it's polarizing the results, and it's very difficult to to skip even some of this I would say pitfalls.
Getting harder and harder to make money in this market, isn't it? Look at Bandhan right now; it's down 13%. Bank Nifty is down 1%, and banks were supposed to be leading the results season with the best-in-class earnings. So, on that, Kashyap, just that point, it's getting so hard to make money in this market. Is this how the state of affairs will be for the next couple of months?
So I think if you look at probably not only this year, but let's say last 3-4 years, and I'll just give you a couple of numbers here. If you look at Nifty 100, the all-time high of that index happened actually almost about 650 days ago, right? And we have not been able to cross that number. But if I look at alongside Nifty Midcap 150 index or Nifty Auto, Nifty Pharma, Nifty India Manufacturing Index, some of these have seen their highs, probably as recently as probably last week or just about 3 months ago. So as a portfolio manager, our job is to find some of these names within this, we have been dealt a card, right? So we have to play it. But what we have been able to do within that, last 3-4 years where we have seen a couple of wars, we have seen tariff tantrums, we have seen probably 5 years ago COVID, so on and so forth. But our job has been to find some of the names within this given, pack which can make money for our clients. I would say we have been able to do a fairly reasonable or even better job.
Kashyap, I remember from our last conversation that, select pharma and healthcare, you kind of like that space, right?
Yes.
What do you make of this latest, missive that's coming in from the US president? By the way, let's pull up the Nifty Pharma Index. Like I mentioned, stocks are lower. By the way, the whole market is lower. The Pharma Index is down 2%. Look at the rest of the market. We must take note of the decline. Bank Nifty is now down a whole 1%. So that's 500 points gone from the Bank Nifty. And it's pulling the Nifty down with it. Nifty is now down almost 0.7%. So now it's turning out to be a weak morning for sure. We are very close to coming back towards the 24,000 zone once again. So this is a tough Wednesday morning for sure. The pharma question, Kashyap. I remember you saying that you like select names here, select sort of businesses here. What do you make of this latest, tariff fear that's come through? And tell us a little more about how you're approaching pharma.
So I think, the funny part of it is that the timeline, if you look at, they have said that, for the first 2 years, there'll be no tariff. For next about 1 year, there'll be 100%. And most likely in the fourth year, there'll be 200%. But, on the funny note, you have elections for, the presidential elections in US scheduled in November 2028. And this 2-year period actually ends on 1st of August 2028. So I'm not exactly sure what to make out of this whole timeline. Having said that, earlier your colleague also mentioned about some of the names which have migrated from generics to, probably specialty within the pharma. I think if I look at our overall portfolio, what we own is only the names in CDMO. We own names in specialty pharma. We hardly probably, I would say very negligible weight or zero weight in anybody who is exposed completely to US or very large part to US generics. So in that sense, the portfolio is insulated from this particular announcement as such. Obviously, there will be a spillover effect of the same on some of the names that we own. But I think overall, broadly, if I look at exposure, we have always avoided exposure to anything which is, fairly large part US generics. But like I said, the timeline to me looks quite funny at this point of time.
I think that's the hope that the market is going to hold on to, that by the time this 100% tariff is supposed to come into play, a lot has changed. I think that's just the hope with which we'll go. But today, of course, the index is down, the overall market is down, the mood is down. So it's all playing out. Kashyap, okay, so what else, where else are you looking? What are the new ideas that you're exploring?
So we have been looking at largely, and we, sort of usually don't change our view, quite frequently. Our views are, slightly long term. And when I say long term, it's at least about, 3 to 5 years in nature. But what we continue to like is auto OEM, auto ancillary. We continue to like names within pharma, but something which is ex-generic, not necessarily zero, but largely which is insulated from that side. And that's been the view now for almost about 8 or 9 years, and not today. What we like is anything within discretionary spends, because generally, if you look at the leading indicators, even for Q1, whether you look at the payment indicators like UPI, RTGS, NEFT, whether you look at, and we don't own a name there, but if you look at generally discretionary spends like spending on entertainment, if you look at some of the other data points like auto retail, they have been doing exceedingly well. I think the only risk there probably down the line, which can sort of give bit of a discomfort to us, but we don't think that's a very great risk at this point of time, is just southwest monsoon and consequent impact on the economy.
Okay. All right, Kashyap, good conversation as always. Thank you very much for taking us through some of the near-term trends and, of course, all the news flow that's impacting stocks and the market. Wish you a good day and look forward to talking again. Maybe once the earnings season gets done, we can do a quick wrap of, what you thought of things. So looking forward to chatting then. Thanks for today.